Around 1 in 3 Australian workers had taxable income above $60,000 in 2022 to 23. Yet many of them quietly let a powerful super tax break slip away. The carry-forward rule lets you use unused concessional caps from the past 5 years, but only if you act in time. By the end of this video, you will know exactly how to check your own carry-forward space and decide whether to use it. The central number here is $500,000. According to the ATO, that is the total superannuation balance threshold below which you can use carry-forward concessional contributions from unused caps in the prior 5 years. Get this wrong, and you either miss the deduction entirely or accidentally exceed your cap. So it pays to understand it before you contribute a cent. Your first move is to log into MyGov and open ATO online. The ATO says this is exactly where Australians can see their unused cap amounts and their total super balance for the previous 30 June. Don't guess these numbers or rely on a pay slip. The ATO record is the source of truth for your eligibility. Next, confirm that your total super balance was under $500,000 on the previous 30 June. The ATO is clear that this threshold is assessed on that prior 30 June figure, not today's balance. If you are sitting close to the limit, this is the first thing to verify because being over it switches off the whole strategy for the year. Now inspect the carry-forward concessional amounts the ATO displays for you. Under the rules, unused cap amounts can be carried forward for up to 5 years before they expire permanently. Make a note of each year's unused figure because the oldest tranche is the one most at risk of dropping out of reach. For 2025-26, the standard concessional cap is $30,000 a year according to the ATO. Carry forward amounts sit on top of that base cap, so if you have unused space from prior years, you can contribute well above $30,000 in a single year. That is the mechanism that makes a high income or higher than usual year so valuable. Now calculate the room you can actually use. Find your year-to-date concessional contributions, subtract them from the $30,000 cap, and then add the eligible unused amounts the ATO shows for prior years. This gives you a single number, the maximum deductible contribution you can make this year without exceeding your cap. Here is why this matters financially. The ATO confirms concessional contributions are taxed at just 15% inside super, rather than at your marginal tax rate. For someone earning $92,000, that gap between their marginal rate and 15% can make a catch-up contribution materially more tax effective than simply taking the same money as salary. Finally, decide whether to make a deductible contribution before year-end if you have room under the carry-forward rules. Check your cash flow, confirm the exact amount with your fund or payroll provider, then make the contribution and keep your records for the deduction claim. A good result is a contribution that uses available cap space while staying safely within the eligibility rules. Remember the timing pressure. The ATO only lets you look back 5 years for unused caps, and that window is rolling. So the oldest tranche expires every single year. Waiting too long doesn't just cost you the deduction. It also costs you years of investment earnings the money could have made inside super. The most common mistake is doing nothing. People who never check ATO online let unused cap space from 5 years ago simply expire, and once it is gone, it cannot be reclaimed. The fix is to review your carry-forward amounts every year and use the oldest tranches first before they fall out of the 5-year window. There is also a stubborn myth that carry forward is only for very wealthy Australians or people near retirement. In fact, the rule applies to any eligible person whose total super balance was below $500,000 on the previous 30 June. The ATO confirms unused concessional cap amounts can be carried forward for 5 years, which makes this a tool for ordinary mid-career earners too. The second mistake is assuming the numbers stay the same. The $30,000 concessional cap applies to 2025-26 and should be re-verified for future years, and the $500,000 threshold is assessed on your previous 30 June balance each financial year. Always confirm the current figures in ATO online before you commit to a contribution. Let's run the 6 steps back quickly. Log into ATO online via MyGov, confirm your 30 June balance was under $500,000, and inspect your carry forward amounts. Then calculate your room against the $30,000 cap, weigh up the 15% tax advantage, and if it stacks up, contribute and keep your records before year end. If this helped, do yourself a favour and check your carry forward amounts in ATO online this week before any older caps slip away. Subscribe to the fine print for more plain English money guides and watch our next video on how salary sacrifice and personal deductible contributions actually compare. Small checks like this can quietly add up to thousands over your working life.